Good morning, ladies and gentlemen. Welcome to Market Forecast, brought to you by Options University. This is Butch Shorrock. It's Monday, November 24th, 2014. Entering Thanksgiving week, let's first take care of all of our government responsibilities. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. With that thought in mind, what kind of opportunities are we going to have in the market this week as we look at another week of trading? Actually, a week that will be shortened some. A good opportunity for you to take advantage of theta as we see the market moving forward. So with that thought in mind, let's take a look and see what happened to the Dow this week, the NASDAQ, the S&P 500, and the Russell 2000. As we saw, the Dow and the S&P 500 up for the fifth week in a row. Positive changes out of all of them except for just a slight pullback in the Russell 2000. And we see the Dow up 1% for the week and up 7.4% for the year. Headed for those double digits. Will we make it by the end of the year? Time will tell, as we are definitely back looking at a bull market. NASDAQ up 0.5% for the week, up 12.8% for the year. S&P 500 up 1.2% for the week and up 11.6% for the year. Russell down just a little titch, as it's down 0.1%, still in positive numbers for the past year. Year to date, up 0.8%. We had an interesting week in the market, but the most notable that took place with our economic announcements took place on Friday. As we looked at Friday, what was it that happened? Well, we got a good news out of two big central banks. People's Bank of China announced its first rate cut in 2 years, lowering its deposit rate 25 basis points to 2.75%, trimming its one-year lending rate 40 basis points to 5.6%. And the news boosted U.S. futures and European futures, and we also got good news out of the European Central Bank. President Mario Draghi also contributed, as he said that there's another reminder that the low Eurozone inflation has become increasingly challenging. The central bank is ready to act fast if the current trends continue. So the good news out of the market. So what did we get out of that? Well, we'll take a look at our charts in just a few minutes. On Monday 24th, we see that we've got very little news taking place. Dallas Fed manufacturing survey comes out at 10:30. Certainly notable. Looking at Tuesday, we got a little bit more interesting news, which we got same-source sales coming out. We've got GDP coming out at 8:30. All those before the market opens. S&P Case-Shiller coming out. And finally, after the market opens, consumer confidence coming out at 10 o'clock. Looking at Wednesday, November 26th, we see monthly reports coming up for last month, and we see durable good orders coming up at 8:30. Jobless claims every Thursday morning, coming out on Wednesday morning because the market's closed for the honor of Thanksgiving. Personal income and outlays coming out at 8:30. Then as we get into the market, with the market open, we got consumer sentiment coming out at 9:55. New home sales at 10 o'clock and pending home sales at 10 o'clock. So a big day in announcements coming out on Wednesday. Now, the market's closed on Friday, so that provides for those of you that are option sellers to take advantage of some of that theta. Generally, we see a lower volume week coming into the Thanksgiving holiday, and we see that there tends to be a upward bias to the overall market. Looking at Friday, November 28th, we got the Chicago PMI. I must note, though, look, you got a lot of stuff coming out on Wednesday. It certainly could have an effect on the market. Chicago PMI Friday morning, market closes early on Friday, closes at 1 o'clock. So we have another opportunity to take advantage of theta as you have less exposure to the overall market taking place. Good news last week out of the market, out of the central banks, and we see that it gave us an end result on our charts. Looking at the SPX, we see that we're up near the top of the Bollinger Band. But what do we call this? We call this a breakout. So that news was well accepted by the market. We'll have to look at the spider to see what kind of volume it was. But nonetheless, we got that breakout. We got consolidation for 2 weeks. Started moving up a little bit on Tuesday, Wednesday, Thursday, and then Friday. Bingo, bango, bongo, out we go. S&P shows wide string. Keeps coming through as these announcements come through. Expecting to enter December here shortly, which for the S&P and Dow and the NASDAQ is the strongest month of the entire year. 30-day moving average, a long way away from our current price position in the market, but nonetheless, still the market just keeps right on chugging along. The upward trend is certainly back in place as we've got the highest highs that we've ever seen out of the overall market. Next, let's take a look at the NASDAQ. Well, let's look at a closer view of it. We see we actually had a pretty strong week. We got a new high on Tuesday. Actually, that's Monday. We had kind of a consolidation day. Looks like a hammer. Certainly could be a reversal signal, but we then consolidated again on Thursday. And this is Tuesday, Wednesday, Thursday, and then Friday. Out we popped with new highs on the central bank news. All right, let's take a look and see what the NASDAQ did. As we see the NASDAQ, let's look at the Dow first. We see the market going sideways. Sideways looks very much like the S&P. And then, certainly according to the Bollinger Bands, has more room to the top side. We'll see if that takes place. Here we got the NASDAQ, and looking at the NASDAQ, we see that we have this sideways looking trend taking place, continues on, and then little weakness. Notice the market was much higher, hit that Bollinger Band to the dollar, and then began to pull back a little bit. So we saw a little weakness in the NASDAQ as it went outside of its normal range, which is measured by those Bollinger Bands. Look at what we've got as far as the 30 and 50-day moving average. The 30, which is the black one, just keeps right on moving, crossed over the 50-day moving average, as the NASDAQ is showing us good strength. Then the Russell 2000 really didn't show us that kind of strength, as we ended up down a slight amount for the week, but still very near some of those highs, as it got the same resistance here that we had back here. So Russell 2000 not really showing us any big pop there. Now, typically when we're coming into December, the December, like I said, is the number one S&P month and the second best month for the Dow and the best month for the NASDAQ and for the Russell. And these numbers go back to basically the 50s. If you chase these statistics, you'll see that we've got good moves out of the market in the month of December, some tax selling taking place, a little bit of weakness maybe in the beginning of December, but by the time we come to the end of the year, we're usually looking at new highs. Well, why? Why does this happen? Well, let me ask you a question. When do you think that the bonuses are paid out on Wall Street? That's right, end of year numbers on the accounts. What's the best way to get your highest bonus? Run the market up. And we've seen that very consistently as we look back over the last 50 years in the market. So it generally is a good time for the market. December has our Santa Claus rally, which we'll talk about later, and gives us some indications of what's going to take place as we go into next year. Trading the day before and the day after Christmas is generally bullish across the board, so we'll look at that when we get to that point. A lot of patterns that we can trace into this month of December. What did the VIX do as the market went higher? Well, let's take a look and see. There we are, down below 13 as the VIX goes down and tries to retrace some of those numbers that we saw early. VIX is low, not a lot of fear in the market. Now let's take a look at our bonds and see what they did during this. And the bonds basically have been going sideways. Last week we looked at a 5-year chart of the bonds, and they certainly have had an amazing rally. All-time highs back on October 6th, looking at TLT, our ETF for the bonds. And we're not all that far away from previous highs in our bond markets. Next, let's take a look at gold. Finally getting a little rally out of gold. Sitting right by the 30 and the 50-day moving average, certainly a downtrend in place as the 30 is below the 50 is above the 200. There's the 200 up there. It's going to take time for this market to make up for this long time pullback that we've had in the gold market. No big flights to safety. Why? No fear in the market. As we look at the volume, we're not going to be able to see the volume on this, but looking at Friday, Friday was a low volume day, not giving us a great deal of commitment on this. And notice what happened with the spider. Opened higher, played higher, and then pulled back going into the close. Not atypical for Friday, but not exactly the most bullish thing you can see on a breakout with low volume and closing in the bottom half of the candlestick for the day. Check your futures as we go into the opening of the market, and you'll see exactly what the market's looking like going into the open. With that thought in mind, let's look at the financials. It looks very much like got a breakout. Looks very much like the indexes which it tracks. Looking at the NASDAQ and the S&P. So financials showing us a bit of strength, but again, showed us that NASDAQ move where it was much higher than it was at the close. But nonetheless, still had somewhat of a breakout. We'll see where that leads us to as we go forward. Looking at oil, oil continues the downtrend. It has a little bit of an uptrend, up cycle, one might say. But you know what you're expecting is you've got a trend line that comes down like this. You're expecting oil to look for lower lows. Why? The trend is your friend, and the trend remains until it changes. And so far, oil in a downtrend. Take advantage of that. With that thought in mind, those of you that are gold members, stick around. We'll talk about our stocks to watch, see what happened as we've got a breakout on Friday. What did these stocks do and what opportunities they provide for us? Have we've just gone through that big, deep V and then getting new highs out of both the S&P, the Dow, and the NASDAQ. What a thrill to watch for all the bulls that are out there. A bullish market that's been taking place since 2009. There are people talking, the bobbling heads are talking about how this thing is going to just keep right on going. But remember, it's your job to look at your charts, know what your trend is, what is it that constitutes an uptrend, what is it that constitutes a sideways trend, what is it that constitutes a downward trend, and knowing those things, what are you going to do to take advantage of this market? That's your job. Options Express is here to help you. We've got lots of great courses. Participate in them and become the trader you always wanted to be. That is Market Forecast, brought to you by Options University. It's Butch Shorak. It's Monday, November 24th, 2014. A time for us to be thankful as we head into this Thanksgiving week. Be thankful for all the things that you've had and all the things that are yet to come. Remember your family, and happy Thanksgiving.